for a loan or for a credit line or for a credit card. But if you get denied, if you get a loan or credit rejection, then the question is what do you do? What are the next steps? How do you handle that? I'd almost assure you that if you're watching this, you probably haven't done the things that you should be doing, because in a lot of cases, if you do what we're going to talk about during today's training, you can reverse the decision. You can turn around a rejection, actually get approved, or you could go a different way, a different product, a different lender to be able to get approved, but only if you do the things that we're going to talk about today. So today we're going to talk about, let's say, 7 different things you should be doing to recover from a loan, credit line, or credit card rejection, basically a denial. Now, first of all, again, if you're following me here on this social channel that you're watching, because we're on LinkedIn and YouTube, Facebook, etc. right now, you'll know this is what I talk about. Like, tune in at least once or twice a week. We only spend about 15, 30 minutes together. And I talk about a lot of the stuff that leads to denials, the stuff that lenders won't tell you, the underlying behind the scenes issues that you really get fixed. And if you're paying attention to my trainings here, then you're able to do these things and avoid these denials altogether. But let's say you haven't had a chance to, or you didn't do the right things and you did get denied. What's the first thing you should do? Well, of these 7 things, the very first thing you should do is understand the reason for the denial. Now, look, honestly, that sounds easier than it is, because in a lot of cases as a consumer, as an individual, when we're denied, they pull our personal credit and they have to tell us by mail if the denial had to do with personal credit. A lot oftentimes does. So we by default already know why we're getting denied as consumers. But as business owners, that's not required. There's no Fair Credit Reporting Act. There's no law that says that credit issuers or lenders have to notify us that we're denied because of credit quality. So in a lot of cases, we're denied as business owners and we don't really understand why, or we're given a reason and the reason really isn't true. The reason really doesn't make sense. So the number one thing to do is you need to find out why you're denied. Look, you can't fix the issue with that lender or go somewhere else and get approved if you don't know what the problem is. And with a lot of loans and credit lines and credit cards, they're doing personal credit checks, they're doing business credit checks. They're looking at your business income documentation. They're looking at personal. There's so many things they're evaluating that you don't know what they're looking at. You are not going to have an idea what to fix. And this is what causes people to get denied again and again and again. They go to a lender, they get denied. They don't know the reason why. Then they go to another lender and they apply and they haven't fixed any underlying reason. Now, I'll give you an example. We see a lot of clients that their application data doesn't match their Secretary of State data. So the lender thinks it's fraud. They've applied, deny. The outcome is always the same because the lenders think it's fraud for the same reason. Then they come to us. We only update their Secretary of State. That's the only change we make. They go back to that lender or credit card issuer and they start getting approved. They get approved at the lender. They get approved at the credit card issuer. They start to get approvals from their previous denials. All that stems from knowing what's causing the problem and fixing it. They're not aware of it. We're saying this could probably be it. It is it, and it corrects it. So knowing the underlying reason is very important. So first of all, if you get denied, you need to know why. If you have a broker or somebody that's helping you with that loan, you need to ask them, what's really going on? Why did I really get denied? If you want to deep dive like I do, then ask to talk to an underwriter and actually talk to the underwriter about what they didn't like. This is a game changer. I've talked before about my experience with insurance for a watch. I tried to get insurance for a watch. I got denied. It was weird. I've never had a claim against jewelry in my life. So I then went and tried to ask to get to an underwriter. They gave me a little bit of resistance. I said, okay, then can I ask you the questions? And they said, yes. I asked them 3, 4, 5 questions that only an underwriter would know. And they said, I don't know the answers. I said, I know, but guess who does? An underwriter. It's why I need to speak to an underwriter, or you can go back and forth to get me the answers. They put me with an underwriter. I got with an underwriter. I said, what is the problem? Why would I get denied? She said, I saw this on this credit report. It was something on my insurance LexisNexis credit report. I didn't even know it was a thing. I didn't know that insurance LexisNexis credit report existed. But when she told me about it, she goes, get the report, fix these things, and apply again. And guess what? I did and got approved. That's why underwriters really help with this first thing you should do, figuring out why did they deny you. If the broker, if the rep you're dealing with can't help you, push to an underwriter and say, what really did you see that you didn't like? And they're then going to tell you what you actually need to fix. And that brings me to number 2, review your finances. This can be done a couple different ways. And by the way, if you're just coming in, give me a shout out. Give me your company name. I want to give you a shout out on the stream. Ladale Bugs is in the house. Ladale, I haven't seen you in a bit. It's good seeing you. Hello, happy Tuesday. And again, if you're just coming in, tell me your company name. I'll give you a shout out. Like thousands of people see this. So it's like free advertising. What? Of course I'll do that for you. Just tell me your company name. I'll give you a shout out. So that brings me to point number 2, review your finances. When you are applying, first of all, before you even apply, you should really look at the income documents or whatever documents they're asking you for. I always like to build in a delay. When they ask me something, I don't just send it. I say, why would they ask me for this? So let me give you an example. If they're asking me for my bank statements, I'm not going to just send my bank statements. I'm going to look and say, like, would I lend to somebody with these bank statements? If my last month, I was negative at the end of the month, I had a bunch of NSFs, those are things that common sense, a lender's not going to want to see. So you may want to clean that stuff up this month, then apply, and don't apply with the last month's bank statements being horrible. If they're asking for tax returns, do you think they want to see that you're losing a bunch of money or making a profit? If I'm applying right now and I haven't filed taxes for the year, then I might not want to show them last year's taxes where I lost 10 grand. If this year I'm going to show 1,000 in profit. Whatever you're showing, does your P&L, does it show you have a profit or does it have a loss? Does your balance sheet show you have like positive money or not? Whatever it is, sometimes it's credit cards. They're not even asking for any of these documents. Whatever documents you're going to send to them, review before you send them. And the other thing is that if it is a reason that you got denied, if they say, look, we had issues with your bank statements, find out what it is, look at what the issue is, correct those issues, and then apply again once those issues are corrected. And again, having a negative balance on my bank account last month is a perfect example. If they ask me for that bank statements and I look at it and it's negative, I'm going to hold off applying until this month is better. Okay, and we've done this more than one time where the lender asks us for something weird or obscure. We get it. We look at it. We're like, oh, that's not good. That's not what we want to show. This month's going to be better. Let's go ahead and wait a month and then reapply. And it makes all of the difference. So number 2 is make sure that you're reviewing your finances before you send them in. Whatever they're asking you for, you review and make sure it looks credible before you send it in. And if you get denied and they say it's because of your financials or your financial statements, then fix the underlying reason and then go back and reapply. Next, number 3, you got to build your business credit score. Okay, I talk a lot about what's called compensating factors. I've been in lending for decades, and I can tell you that compensating factors are something you need to know. And by the way, NBTB Solutions LLC is in the house from Anaheim, California. Thank you very much for coming in. So remember, when you're applying for a business loan, your business credit scores matter. They just do. Okay, lenders don't tell you they're polling them to make lending decisions, but they are. So what you really need to do is you need to make sure that you're focusing on building your business credit profile and score, because that goes a long way to compensate if you've got negatives. So let me give you an example. Let's say my personal credit isn't that good and I'm applying for a loan where they look at my personal credit. Well, if I build my business credit, that's a really good compensating factor. My personal credit's bad. My business credit's good. It doesn't trump my damaged personal credit, but it helps me overcome that issue that would previously get me denied. I'm able to go to my lender and I'm able to say, hey, look, here's the deal. I had some personal credit issues along the way building this business. Now I'm fixing those, but the business is healthy. It's always paid its bills. Here's copies of my business credit reports to see that. Now, whether you say that or not, they're looking at business and personal credit and they're thinking of it the same way. Here's an entrepreneur. They took risks. They damaged their personal credit when they were launching this business. Very common that we see that. And then they say, but then they built business credit, which is something we don't normally see a lot of small businesses do. And then this business credit report looks really good. They've got like 10 accounts on there. They paid those accounts as agreed. So they might have struggled personally to get here, which accounts for the damaged personal credit, but they built business credit, so we're going to give them this loan. This is very, very, very common. If your business can prove it can pay its bills on time, they're way more likely to look over the fact that your personal credit might not be as good. Let me give you another huge one. If I go right now to get a Staples or an Office Depot credit card, they say right on the application page, that I need to have $1 million in, $3 million in revenue in 1 year in business to be able to get approved. So here's the thing. I see tens of thousands of clients get approved for those credit cards, even though they don't have 3 million in revenue in 1 year in business. They don't have that, right? So that being said, this is a point and proves that if they have the accounts on their business credit reports, they still go get approved. So you come to me with Staples and you have 15 accounts on your business credit reports, you're going to get approved with Staples. I don't care if you meet their revenue requirement or their time in business requirement. The reason I'm telling you this is how much of a compensating factor business credit reports are. That credit issuers that clearly say you need this much in revenue and this much in time in business, don't even apply unless you have it, will still approve you if you don't have those things just because you built your business credit. That's how strongly lenders and credit issuers look at your business credit profiles and scores. The business credit reporting agencies will give you failing scores even when you have no credit on the report, because not having business credit is so big of a risk to them that they will give you failing scores that lenders see. So the bottom line is, by building business credit, you eliminate these bad scores that exist because you don't have the credit, but you're also creating this really strong compensating factor that will help you overcome time in business, not meeting their revenue requirements, having damaged personal credit. A lot of the stuff that will get you denied just by having the compensating factor of business credit will actually help you overcome that. And Shondi, I love Shondi. Shondi's in the house with Dream 12 Properties in Columbia, South Carolina. Shondi, it's always good to see you. Thanks for coming in and tuning in from YouTube. So the next thing is consider a cosigner or collateral. It's a good idea just to ask this question. I can't tell you how many loans I've gotten in my life just because I asked this question. We're not going to approve you. Okay. Would it help if I add a cosigner? Would it help if I added collateral to the approval? They say, yeah, it'll help. And so then I get it approved. The last line of credit that we actually got, they said, look, we are willing to approve this if another one of my companies signed as a signer. Now, at first I was like, no, like middle fingers in the air, like my other company's not going to sign for debt this company's taking on. But then I realized why. All my shares in the main company are owned by another company. So what they're really asking for is the company that owns the shares in the main business to be a signer. That made sense. But because I was a signer, because I let my business be a signer for the other, which made sense because that business owns the equity in the main business, they approved that, and they wouldn't have approved it if that business wouldn't have been a signer. So again, ask, will a cosigner help? It might not even be an individual. It might be another business. They may say, if you have another business, that one could be a signer for the primary business. Okay, this exact same thing happened and was asked for when I got my airplane loan. They said, will my company be a signer for the plane? I said, no, they won't. And I gave them compensating factors and they approved it anyways, but they even fished to ask if another company could be a signer. So a cosigner, an individual, another company being a signer, that can help. Ask and see if it makes a difference. The other thing is do you have collateral? Do you say, hey, if I provide some kind of asset as collateral, will that make a difference? Oftentimes it will. Account receivables, inventory, purchase orders, could be equipment. It could be, I think I already said inventory. And it might be something personal too, stocks, bonds, 401ks, IRAs. But ask the question, would a cosigner make a difference, individual or business? Would collateral make a difference? And oftentimes they may say yes, and it may be something you're willing to give or something you're not willing to give. So I'll give you an example. I applied for a loan where they wanted to collateralize my personal home for an SBA loan. I told them no, I wouldn't do it. And then I went to them, I said, why are you even asking for that to begin with? And they said, well, because you have these judgments on LexisNexis. I said, I don't have those judgments. That's not even a true thing. I proved to the lender that I never had these judgments they're claiming. I cleaned up LexisNexis as well. They approved me and removed the collateral requirement for the home. But the point is the same. They were uncomfortable with the application for a reason. The reason here was the fact that there was judgments that weren't even real, right? So because of that, they asked for collateral they didn't need. So it goes to show that lenders will use collateral as a way to offset the risk and make them more comfortable. So ask them, will a cosigner make a difference? Will collateral make a difference? And that brings me to point number 4 or number 5. I think I'm on point number 5 right now, right? We need to understand why we're denied. We need to review our finances before we send them in and find out if there's issues that they address and say the reasons that they denied us are because of those. We need to fix them. We want to build our business credit. We want to consider a cosigner or a guarantor, right? And the next thing is we want to build relationships with the lenders we're applying with. This really is the case with tier 1 regional banks or tier 1 national banks. So tier 1 banks are like Bank of America and Chase, right? Regions, like the big national banks. So if we're applying for financing through those banks, we really should consider opening up some accounts with them and start running some money through them. Our probability of getting approved exponentially increases if we do this. So if you're going to go apply for Bank of America and you get denied, well, then consider opening a Bank of America account, run some money through there 90 days, and then go back and apply for that exact same lender, and you'd be blown away at your increased probability of getting approved. Bottom line is, have a relationship with the bank before you even apply. I got a car loan. I think it was my Aston Martin that I owned. And in order to get the lender wanted me to open a relationship with the credit union. They were a credit union. They said, you got to open an account with us. So they required me to open the account, which I did to get the loan. But again, if I would have had the account open with that credit union, they never would have had to ask. They would have automatically approved it because I'm a member. So that just goes to show that it was essential. It was a requirement to have an account with them before they would even give me the car loan. So this is now, you know this, you can get this set up before you even apply, or if you get denied, go open it, build the relationship with the banker, and then apply to actually get approved once you do that. And again, if you're just coming in, tell me where you're coming in from. I'm going to give you a shout out to your company name right here on the stream. And this brings me to exploring alternative lenders. Look, if you get denied, then what other lenders are out there or lender programs out there should you be applying for instead? In order to do this, you just need to know my basic 3 C's, right? Cash flow, credit, or collateral. A lender's looking at 1, 2, or 3 of these C's. Find out. On deck, they just care about revenue. If they're just asking you for bank statements, well, then they probably just care about revenue. If they're asking you for just collateral, they probably just care about collateral. And if they're asking you just for credit pull, then they probably care about a credit pull. If they're asking you for all 3, then they probably care about all 3. So know where your own strength is. If your personal credit's not good, stop applying for financing that's looking at your personal credit as a driving factor to get approved. If you don't have cash flow because you're a startup, then make sure you're not applying with lenders that are looking for cash flow to approve you, like On Deck. If you don't know, find a business loan broker. Come to Credit Suite. We charge you $0 to help you with business lending, okay? So if you need our help to place your loans, we'll help you with getting the loan placed. But know what the lender looks at. Are they looking at cash flow? Are they looking at collateral? Are they looking at credit? If you don't have that, then don't apply with the lender that's primarily looking at that thing. If you know you have that right, I have cash flow. I'm consistent with my cash flow. I applied for a cash flow lender. They denied me. Then you want to look at another cash flow lender. They may come back and go, I didn't like your industry, right? And then you're like, oh, I never even thought that was a thing. Well, then go find another lender that is a cash flow lender that likes your industry, whatever it may be. This is why asking them and knowing the reason for denial is essential to fixing it. Because if they didn't like my bank statements, well, then I can fix my bank statements and reapply. If they didn't like my industry, well, then I can find another lender that looks at my industry and then go apply with a different lender that likes my industry. Not knowing why I'm denied, there's too many things to fix to try to turn around. That's why that number 1 we talked about is so essential. So again, look at alternative lenders. If you're applying at big regional or big national banks, look at regional banks instead. Look at credit unions instead. Look at fintech, online lenders instead. Look at somebody that will cater to you based on your strengths if you don't meet the requirements that they have. Okay, so again, alternative lenders, fintech lenders are 90% easier to get approved with than the big banks. So look at regional banks, look at credit unions, look at fintech lenders. Those are way more viable options than the big tier 1 national banks like Bank of America or Chase, for example. And that brings me to point number 7. Stay persistent and optimistic. If you've done these other 6 things we've talked about, then you have a pretty good idea of why you're getting denied. You're able to fix those issues. You're able to find a lender and find a type of loan program that you're actually going to qualify for. If you've worked through and done these things, then you're going to be successful when you go out and actually apply. So stay positive, right? Work on manifesting that approval. But again, that's not going to work on its own. You got to do these other things we talk about to know why you're getting denied, address those issues so you can come in and actually get approved. So that wraps it up. I mean, these are the 7 things that you need to do to make sure that you can recover from a business loan denial. Number 1, you got to know the reason you got denied. And if you need to press all the way to an underwriter, press to an underwriter, but find out exactly what they didn't like. Okay, I say this all the time. I can't fix problems I don't know about, right? I teach my kids this. If you get in trouble, you need to freaking let me know. You're not going to be in trouble with me. I'm going to get you out of the trouble, but I can't fix problems I don't know about. So if you've got problems, you got to let me know so I can get involved to fix them, right? I'm really big on that. I can't fix problems I don't know about. You're the same way. You have to know from the lender, especially the underwriter, why you got denied, so to know what to fix to then go back and reapply. You got to review your documents before you send them in. Anything they're asking you for, they're going to review. If you look at it and the document they're asking you for sucks, fix it before you apply. If your bank statement's negative last month, don't go apply. If they're looking at your bank statements, get your bank statement right this month and then go apply. It's another reason you don't want to go applying for money when you're in trouble, because there's plenty of indicators they're going to see they're in trouble. No bank wants to lend to you when you're already on your way down. So review those documents before you apply. And if they tell you that you got denied because of one of those documents, look at it, see what you can do to fix it, and reapply with the same lender or a different one. Next, work on your business credit scores. They're looking at it. Lenders are looking at your reports and looking at your scores. Just by building those, you exponentially increase the probability you'll get approved. And on top of that, just by fixing those and building them, you have compensating factor for damaged personal credit, time in business, revenue. Again, we see this in business credit building where lenders will overcome their time and business requirement and overcome their revenue requirement just because you have established business credit. That's how highly lenders and credit issuers look at it, is that they look at it so high that they will automatically give you as a compensating factor and overcome things that would normally deny you for. Think about a cosigner collateral. Ask the lender, if I had collateral, if I had a cosigner or another business or an individual, would it make a difference? You'd be shocked at how many times they'll say it will make a difference. And you have a cosigner, company, individual, or collateral you're more than willing to give to get the approval. Next, build a relationship with the lender. Remember, having bank accounts with a bank like Chase, Bank of America Regions, or even Bank of Tampa here, a regional bank, makes all the difference with getting approved. So try to build a relationship with that bank. Even On Deck, that's an online lender, they have checking accounts. So if I'm going to apply with On Deck, I'm going to open a checking account, run money through them for a few weeks, then apply. It makes a night and day difference on whether you have accounts and a relationship with that bank or you don't. Next, explore alternative options, right? If we're applying with a national bank, look at regional banks, look at credit unions, look at alternative lenders. Know what your strength is, cash flow, credit, or collateral. Go find a lender that lends based on that strength. And if they deny you for something like they don't like your industry, well, then go apply with another lender that does like your industry. But find an alternative lender. They're way easier, like online fintech lenders, to get approved with. And last, stay optimistic, right? If you've done these things, you know why you're getting denied, you know what to fix it, find the lender, same lender or different lender, and go and reapply. And if you fix these other things we talked about, you're well on your way to being able to get approved. So that wraps it up. If you got value from this training, make sure you like and subscribe and keep your eye out for our next training, because all we're doing is talking about all the things you need to know to be able to get more money to grow your business.